I'm Mark Crumpton. You're watching Bloomberg Technology. Here's a check of First Word News. British Prime Minister Theresa May today praised the collective action by the U.S. and some European nations to expel Russian diplomats. The move follows the poisoning of a former Russian spy and his daughter on British soil.
Together we have sent a message that we will not tolerate Russia's continued attempts to flout international law and undermine our values. European nations will also act to strengthen their resilience to chemical, biological, radiological and nuclear-related risks, as well as bolstering their capabilities to deal with hybrid threats.
The Kremlin says Russia will likely respond quid pro quo to the expulsions of its diplomats. It alleges that, quote, powerful forces in Britain and the U.S. were behind the attack. Meantime, Moscow says Britain has made European countries hostage of its anti-Russian policy. A spokeswoman for Russia's foreign ministry said Britain failed to provide any evidence to back its accusations of Moscow's involvement. North Korean leader Kim Jong-un reportedly made a surprise visit to Beijing today, and what's believed to be the first trip outside the Korean peninsula since he took power. That's according to 3 people with knowledge of the visit who say it's not immediately clear how long Kim will stay or who he's meeting. Global news 24 hours a day. In New York, I'm Mark Crumpton. Bloomberg Technology is next.
And this is Bloomberg Technology. Coming up, stocks recover from last week's market rout. Tech stocks surge in Monday's session. We will break down the biggest movers. Plus, Facebook under federal investigation is trying to weather the storm. Can Mark Zuckerberg keep both advertisers and lawmakers happy? And Uber agrees to sell its operations in Southeast Asia to local rival Grab. We'll discuss what Uber gets in return and the global plans for the world's biggest startup. First, to our lead. U.S. stocks surge back from its weekly rout in 2 years, with major benchmarks climbing more than 2% on signs that an escalation of trade tensions was beginning to ease. Shares of Microsoft jumped more than 7%, its best one-day gain since October 2015. Other big tech firms like Amazon and Apple also pulling ahead. For more, I want to get straight to our Bloomberg News stocks reporter, Abigail Doolittle in New York. So, Abigail, walk us through the comeback.
Well, the bulls were certainly out today, Emily. What a day for the major averages in stocks. A big rebound rally from 2 weeks of intense selling pressure, especially last Friday when we had some especially bearish action. But today, the buyers were out buying the dip and encouraging perhaps, at least for the near term, the major averages. The Nasdaq opened up about up about 2%, fell back from that a little bit, positive all day, but then steadily climbed from late morning and steadily climbing in the last half hour of trading. Some investors and strategists say that the real buying and selling happens in the first 30 minutes of trading and the last 30 minutes of trading. So at that time, the bulls were really out supporting the major averages. And the Nasdaq 100 outperforming, up 3.8%. All of the major averages having, as you mentioned, their best day since August of 2015. And it was all about tech. Tech was up 4% on the day. So some buy the dip action here from investors, led in part by Microsoft. As you mentioned, Microsoft up more than 7% on the day. Morgan Stanley had some very bullish comments out, raising their price target to a street high of $130 per share, citing prospects for the cloud, plus the possibility of improving gross and operating margins. And that seemed to put a little bit of a floor for tech buyers. Investors must be impressed by this analyst at Morgan Stanley and really take the call seriously. But it really did, again, seem to help out technology overall, because as you mentioned, we had lots of other tech names trading higher, including Apple and Intel. We also had the FANG trade trading higher. Facebook, Amazon, Netflix, and Alphabet on the close, all higher. So that piece of the market action recovering as well. That is, of course, about 25% of the Nasdaq 100. So lots of high beta stocks trading higher today. A real whipsaw reversal of last Friday's action and really the last 2 weeks. But overall, Emily, over those last 2 weeks, we are still lower.
That said, Facebook ending the day slightly higher, but certainly not making up for the week of losses last week. The stock still down about 14% over the last 7 days. You know, why isn't Facebook part of this rebound?
Well, you know, Emily, this is pretty interesting, actually, because on the lows today, Facebook was down about 6.5%. This is the official news came out that the FTC has launched a non-public probe into privacy issues around the company and this data crisis that they are facing and struggling. So investors really selling that news, despite the fact that that was largely known. And then slowly but surely, as the rally on the day really seemed to grow, some investors became a little bit more friendly to Facebook. But, Emily, I'm not sure it's going to last. Let's take a look at a chart here. This is a great chart on Facebook. G# BTV 1506. We see last year's beautiful uptrend in relation to the 200-day moving average in blue. We see an area of congestion this year, similar to what we're seeing in most of the major averages. And on that data crisis news last Monday, a big gap lower. That's bearish. It tells you the buyers were absolutely blindsided right through that 200-day moving average. And now you can see that Facebook is just kind of dangling from that area of trading from before this. This chart suggests that we could see Facebook go below 140. Just this overhang of uncertainty about the possibility of fines and regulation, Emily.
All right, Abigail Doolittle breaking it all down for us in New York. Thanks so much, Abigail. As we've been talking about, Facebook on track for its worst month since May 2013. This as the fallout over the misuse of its data by Cambridge Analytica continues. The Federal Trade Commission announced today that it is investigating the social network's privacy practices. This, in turn, triggering a warning from Colin Sebastian, analyst at Baird, who said this could, quote, pause some Facebook advertising campaigns until headlines subside. Here to discuss the latest in Facebook news, Sarah Fryer, who covers the social network for Bloomberg. Also with us from Washington, Bloomberg's Sarah Forden, who writes about corporate influence. So, Sarah, first of all, this headline from the FTC, how unusual is it for the FTC to actually confirm an open investigation?
It's very rare for a federal agency and an enforcement agency in particular to come out and confirm, what its target is, what the investigation is. So this was unusual. It was a statement on the FTC website by the acting head of the Bureau of Consumer Protection, which would look into this question about the user data. And it did acknowledge that it was very concerned about the revelations in the previous days and weeks and was going to look into them very seriously.
So, Sarah, what do we know about how this FTC investigation might proceed?
Well, it's a non-public investigation.
Oh, sorry, there are two Sarahs. Sarah Fryer. Let's go to Sarah Fryer first.
Well, it's a non-public investigation. It's going to kind of be in the context of all the prior work the FTC has done on Facebook and not done on Facebook. Remember, there was a 2011 consent decree that Facebook had with the FTC where it had to alert users if their data was going to be used and get their explicit permission, and if not, they could be fined. So the FTC is likely looking at whether Facebook deserves to be fined for the data that has ended up in the hands of third parties who did not have explicit consent to access it.
Now, Sarah Forden, what's interesting is, Facebook, the social network, can always put this back on users. Well, you opted in, even if you didn't quite understand what you were opting in for. How does that play into what the FTC is actually looking into?
Well, as Sarah mentioned, now after the FTC did the consent decree in 2011, they do have to get what they call express informed consent. So users have to be very aware of what they're agreeing to regarding the use of their data. What the FTC will look at, and we won't have any updates along the way because they did say it's a non-public investigation, but they are going to go back and look at how the data was transferred first to the research firm and then to Cambridge Analytica, and whether Facebook had a role in that and whether it violated the terms of that earlier agreement.
Now, various lawmakers have been calling on Mark Zuckerberg to testify. He has said he will testify if he's the right person. Representative Sheila Jackson Lee, who's on the House Judiciary Committee, had this to say about legislation. Take a listen.
And I believe that legislation should be written in order to give the tech industries overall guidance from the United States Congress, from laws. And believe me, there are congresspersons who are strong advocates of the strength of tech industries, matching up with those who are strong constitutionalists. And out of that should come a bipartisan legislative initiative that really gives a framework on how to protect the American people, but at the same time continue the business model of the tech industry.
Meantime, Sarah Fryer, Senate Judiciary Chair Chuck Grassley, has asked Mark Zuckerberg to testify in April. Is this actually going to happen?
Well, it is an invitation. It is not a subpoena. It is one of those invitations that Zuckerberg can decide, is this something I want to do? And if he decides that he's not the right person, then they can really escalate their ask and make it something a little bit more dramatic. In this particular ask from Grassley, he's also calling on Jack Dorsey and a Google executive to come in to speak to these issues. So it's not just about Zuckerberg. They want to understand the broader scope of the problem here. All this data collection that these companies do on our behalf to serve us the right kind of things, a lot of it is happening, in a way that we're not fully aware of.
Right. All right. Sarah Fryer and Sarah Forden on our Bloomberg News team. Thank you both so much. We'll continue to follow, of course. Coming up, Uber exits Southeast Asia, selling its operations to Grab. We discuss the ride-hailing landscape in the region next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Uber has agreed to sell its Southeast Asian operations to Grab, withdrawing from yet another fast-growing region. Grab will acquire all of Uber's operations in a region of 620 million people, including food delivery service Uber Eats. In return, the U.S. ride-hailer will take a 27.5% stake in a combined entity, and its CEO will join the board of Singapore-based Grab. For more on the deal, we're joined by Bloomberg Tech reporter Eric Newcomer. So I'm so curious about this deal, and similar to what happened in China, is this a win for Uber, despite all of the money they may have lost investing here? And obviously, the ultimate result that they couldn't go it alone. Having 27% of the local winner isn't a bad deal. Yeah,
given the existing valuations of ride-hailing companies, I think investing $700 million to get a huge chunk of leader in the region and sort of forming an alliance makes a lot of sense. Or it's good to have invested the money. Whether it's good to have made the deal and abandoned the market, I think is the open question.
So Dara will be joining the board. How does what happened in Southeast Asia compare to what happened in China? Very similar? What are the differences?
I think in China there was more of a concern that there could be government intervention in some form, or there was more urgency to cut a deal in a way that I think Southeast Asia did feel like Uber could have kept going if it was willing to foot the bill. So this was more of a tactical retreat than sort of an assessment that the long-term a local player might have certain advantages that Uber would never have.
Now, give us the bigger picture, because now there are really only a couple of key battleground areas around the world
right now
where Uber hasn't pulled out.
Uber is now saying, okay, India, Latin America, the Middle East, we are focusing, we want to be, the A in M&A. They want to acquire these other companies or dominate those markets and not abandon them. And there's certainly some sniping from former employees saying, this is a less global Uber now after the deal. And so I think Uber is going to have a tougher time negotiating with some of these other companies, given that they've sort of shown weakness here and shown a willingness to take a minority stake. And so there's going to be a lot of jockeying around sort of doubling down, especially I think in India, and saying to Ola, we're not going away, you're not going to give us 30% to get us out of this market.
Interesting. All right, Eric Newcomer, who covers Uber and ride-sharing for us. Thank you very much.
Thank you.
We're going to continue our discussion now of this Grab Uber deal. Jishun Fu, managing partner at GGB Capital, joins us on the phone from Shanghai. He is one of Grab's earliest investors, leading the Series B round and serving on the board, and was also involved in the Uber Didi deal in China. So what's your take here, Jishun? Is this a win for Grab, giving away 27% of the company?
Well, I think it makes a lot of sense. The competition have definitely both happened in China and in Southeast Asia has, required a lot of investments and in some ways there's a lot of wastage in the process. So the consolidation does make a lot of sense, I think, for both Grab and Uber, Southeast Asia. So I think the threat that what China did, what they did in China, both with Didi and now in Southeast Asia, is both a good deal for both companies.
Uber also just got a huge investment from SoftBank, which of course has its hand in other ride-sharing companies around the world and Uber's competitors. How much do you think that's playing a role in the decisions that are being made about strategic partnerships?
Well, I think Masa is a very influential man. He has his stake now in Didi and also in Uber and Grab over the years. So, and from his perspective, obviously, this consolidation makes a lot of sense, and he definitely has a hand in it in the whole process. So, I do think that the local services, though, is the direction to go, going beyond just the ride sharing. Because if you look at what's happening in China, Didi, despite the consolidation, will face competition from the likes of Meituan and the bike sharing services. So the competition is not over yet. I think that the consolidation is a step forward for Grab and Uber to have a stronger lending on the local services.
If that's the case, then what would your message be to new Uber CEO Dara Khosrowshahi about India, about Latin America? Are these markets that similarly they should wave the white flag in?
Well, I don't know enough about these other markets to make to provide a good advice, but certainly I think in what we have seen in Southeast Asia is the ride-sharing service is actually a fairly local business, and I think it has to extend beyond just ride per se. You have to offer a more comprehensive service on your platform, and that requires, including food delivery service. And with higher density cities like, Beijing, Shanghai, and other cities in Southeast Asia like Bangkok and all, the bike sharing, and including Jakarta, bike sharing can be a strong contender to the service as well. So you have to have this comprehensive service on the ground. And so these other markets like India and Middle East, I don't know enough about them to make those comments as of now.
You have overseen a number of M&A deals, whether it was Uber, Didi, now Grab, Uber, also Youku Tudou and Alibaba, Ctrip and Qunar. Do you see more M&A in the ride-sharing space globally and locally? Or, do you see a bunch of, multiple local ride-hailing competitors continuing to square off in various markets around the world?
I think that there may be more consolidation. Like I mentioned, I think here in China, the bike-sharing services is taking off in a big way. We have not seen the same phenomenon yet in Southeast Asia or in other parts of the world. And that itself will be a strong contender, a force to be contend with. So I think there may be more consolidation. And I think the way I look at these services is not just a transportation service or not a transportation network. It's more local services, where users' engagement can be high and is a wide range offering rather than just, getting a car ride.
All right, Jishun Fu, GGV Capital, on the phone with us from Shanghai. Thank you so much, Jishun, for joining us and that context. Coming up, one European robotics company is doubling down on its efforts in China. Details behind Swiss automation giant ABB's decision to do that next. This is Bloomberg. Now to some tech news out of Europe. Swiss automation giant ABB expects to double production and staff working in robotics in China over the next few years. ABB already has the largest market share in China. So what is driving this expansion? Joining us now from London, Bloomberg's Caroline Hyde. So Caroline, walk us through the expansion here and what is behind it.
I mean, this is a vast company already with presence in China. I mean, 17,000 employees currently in the country, but they want to double that. So they're going to have 34,000 over the next few years. They're going to be doubling their production. And this is a company that is across many an industry group. Oil, we're talking gas, we're talking mining, you name it, they're in it. But notably, they want to provide robotics at the moment because China cannot get enough of them. Even though China has 30% of the world's supply currently of robots, it's not that much in comparison to their workforce. So about for every, 10,000 workers, they currently have 100 robots. Well, if you go to other developed nations such as Germany, if you're looking in Singapore, if you're looking in South Korea, they have 3 times that. They have 300 robots per 10,000 workers. So China has a lot of catching up to do here. So they want to be ploughing investment in. And notably, the time is sort of ripe for ABB because actually China's promising to help subsidize their localities, their cities, to be able to buy these sorts of robots and get them into their industry.
So, how does this company deal with sort of the lax intellectual property standards that, we've been hearing about for a very long time and that the U.S. has recently hit back at with these tariffs?
Exactly. It's what you must have seen when you were out in China yourself. It's certainly what Donald Trump is fighting back at, so he says, is why he's whacking the tariffs on Chinese-made goods, is the fight for intellectual property. And this is something, actually, that the ABB CEO did speak to while he was in China at the Development Forum. And he's saying, look, actually, we've just got to beat them at their own game. I love this turn of phrase that he used, and he notably just said, we've got to write the book faster than they can read it. That's why they're pouring money into R&D. They've already got 2,000 people in China working in research and development alone, and they pour $1.5 billion into it per year worldwide. So it's all about R&D for them.
And I want you to give us an update on the latest with Facebook. Obviously, many regulators in Europe have been speaking out. Now we're hearing more from Germany. What exactly are we hearing from the region?
I mean, it's come out fighting, and I'm not surprised. When I was based in Berlin, they really do have issues about their data privacy. If you want to have your business in Berlin, well, you've got to put servers in Germany. They're very worried about this, and this is why we're hearing in particular from the minister, the justice minister. She's called Katharina Barley. She's saying in particular that the handling of the private data by Facebook has been, get this, intolerable. She just met with Richard Allen, we understand, that's the head of public policy for Europe, and apparently his promises, Emily, were not enough. They need much tighter supervision of companies like Facebook in the future. That's what Germany wants. And remember, they can already slap on fines for if you don't take your terrorist content or related hate speech down from social media quickly enough. Now it looks like they're really going to fight back on the data privacy stretch of things as well.
All right, Caroline Hyde for us with that update from London. Thanks so much, Caroline. We'll see you a bit later in the show. Coming up, more of our coverage on the fallout from Facebook's data scandal. Will it send advertisers running, or can the social network keep them on board? That is next. This is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg Technology. Here's a check of First Word News. Russia's ambassador to the United States says Washington's decision to expel 60 Russian diplomats over the poisoning of an ex-Russian spy in Britain is destroying what's left of Russia-U.S. ties. Anatoly Antonov criticized the U.S. move as ill-considered and provocative. He said Moscow will take what he called an adequate response. In the months ahead of a mandatory national election, Malaysia is taking aim at fake news. According to a proposal submitted to Parliament today, people convicted of creating and distributing misinformation could face imprisonment and a $128,000 fine. The law will apply to anyone inside or outside Malaysia, regardless of nationality or citizenship. Adult film star Stormy Daniels is suing President Trump's lawyer Michael Cohen for defamation. Daniels, whose real name is Stephanie Clifford, says Cohen falsely accused her of lying when he denied her affair with Mr. Trump ever happened. Daniels' interview on 60 Minutes Sunday night was reportedly the most watched episode of the broadcast in more than a decade. Appeals court judges in Brazil today unanimously upheld their decision to reject former President Lula da Silva's appeal of his conviction on corruption charges. The move brings him a step closer to being barred from the presidential ballot and possibly imprisoned. Despite the legal woes, da Silva is leading the polls ahead of October's presidential election. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Prumpton. This is Bloomberg. It's just after 5:30 p.m. here in New York, 8:30 Tuesday morning in Sydney. My colleague Paul Allen has a look at the markets. Paul, good morning.
Good morning, Mark. Yes, trading has been underway this Tuesday for about 30 minutes in New Zealand, and already we've got the NZX higher by about 2/3%. And this is, of course, after a very positive lead from Wall Street. We see all major indices up. The Nasdaq 100 posting biggest gains since August 2015. All this on optimism as the threat of a trade war with China may be receding. And the joy is spreading through to the Asia Pacific. We've got ASX futures up 0.4%. This is after the local index slumped below 5,800 points on Monday. Nikkei futures higher by more than 2.5%. The Aussie dollar closing in on 75 cents US. The yen, the only major currency, weaker against the US dollar. Quick check in on commodities. We've seen gold rally, oil weaker, copper meanwhile moving below its 200-day moving average. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. Back to our continuing coverage of the fallout from Facebook's data scandal. As we reported earlier, an analyst at Baird is warning of a potential halt to some ad campaigns on the social network. Facebook CEO Mark Zuckerberg took out full-page ads in newspapers in the U.S. and the U.K. to apologize for Facebook not doing enough to safeguard user data. But is that going to be enough to keep advertisers happy? Joining us to discuss, Debbie Aho-Williamson, analyst at eMarketer. So, Debbie, of course, a lot remains to be seen about just how Facebook will deal with this, but you have analysts out there saying buy, analysts saying sell. You've done some really detailed research. How do you expect that this will hit the top and bottom line?
You know, that's something to be seen. I'm going to be really interested in seeing what the quarterly results will reveal in a few weeks. But for now, I think advertisers are thinking about a couple of important issues. The first one is, what are users doing? Are a lot of them doing the hashtag delete Facebook? Or are they perhaps keeping their accounts but using Facebook less? And does that then leave fewer people or fewer hours of time spent on Facebook and less room for my advertising? They're also, I think, concerned about any sort of regulatory impact on the data that they have access to with regards to targeting advertising. If there were any sort of regulation that would involve reducing their ability to target advertising, that's going to impact their ability to use Facebook going forward. And I think that's weighing on the minds of advertisers as well.
Let's talk about what we're seeing with engagement. I have a chart here, #BTV5751, which shows you daily active users as a percentage of monthly active users, which is a really interesting way to examine engagement. How many Facebook users are going to the app every single day? And we're seeing it plateau. How much of a concern is that?
Well, I think that obviously Facebook does want to continue to see growth in daily active users. But not only that, they want to see growth in engagement, not just people randomly or absent-mindedly scrolling through their feed, but actually interacting and talking to people, engaging with their friends and family. That's why you saw Facebook a couple of months ago redo its algorithm to favor that content from friends and family, because they really need people to spend more active time on Facebook, not just logging in perhaps once a day to just randomly look at what's there.
So, you know, talking about advertising in particular, there's a lot of questions as to how Facebook will potentially evolve the way that it uses data in order to target users, in order to target advertising. I have another chart here, G#BTV3831, which shows that as the prices of ads have grown, the growth in ads has actually slowed. You know, I'm curious what you think advertisers are going to do here. Are advertisers going to wait this out? Are they going to keep pouring money into Facebook because it is still one of the best ways to reach a very specific user, or are they going to leave?
You know, and those are conversations that we're having right now with eMarketer's subscriber base. But I can tell you, at least preliminarily, what we're seeing is that Facebook is still one of the largest platforms around in order to reach a mass audience of people. And you have to remember, at the end of the day, a lot of major brand advertisers still want to reach a lot of people. So that's one side of it. I think the targeting is another issue. Certainly the ability to very finely and precisely target people on Facebook is something that advertisers love about Facebook. And once again, if there's any limitation to that going forward, that is going to give them some pause. But I think for now, those advertisers that are looking for branding goals or just that massive reach are going to continue to use Facebook and are going to continue to want to spend time and spend dollars there, and then watch what happens in the next couple of weeks or months with regards to the usage.
All right, Debbie Aho-Williamson, eMarketer analyst. Always great to have you on the show. Thanks so much, Debbie. I want to continue to look at what this means for Facebook and advertisers with Michael Wolff, the CEO and founder of Activate. Prior to that, he was president and COO of MTV Networks and a Yahoo board member. He joins me now live from New York. So, Michael, I'm curious, you know, just speaking with Debbie earlier about the power that Facebook still has and the fact that, you know, crises like these Facebook has weathered before. How big a deal is what Facebook is going through right now? You know, how much of an impact will this actually have on Facebook from a reputational and a business perspective?
Stepping back and looking at the big picture, Facebook is an integral part of marketers' campaigns today. And there are advertisers that are looking for Facebook to help drive their sales. And if you think about it, you segment advertisers. There are advertisers that look at branding, and there are advertisers that use Google and Facebook for what you would call performance, to drive specific sales. And apart from Google and Facebook, those are two of the most important ways in which advertisers are not only driving sales online, but driving visits into an automobile dealership and coupons. And so I think it's going to be an important part of what advertisers do, and it's going to continue to be. The bigger issues from... Go ahead.
Right. Well, I want to ask you from a reputational perspective, and, you know, just in terms of trust of users, you know, they might say, well, users opt into this, but, you know, even when users opt in or check a box, they don't understand how their data is being used, and Facebook hasn't done a good job of being clear about how their data is being used. Will this fundamentally undermine trust in Facebook and thus impact engagement?
Yes, it will undermine trust. But at Facebook, there's a lot that Facebook can do to reestablish that trust. First of all, it's less about privacy and it's more about control. Facebook needs to be explicit in allowing people to have control. Second of all, Facebook needs to be clear to its users what information they have on them and how that information is being used. So in the last couple of days, there has been news that Facebook was using data from conversations on WhatsApp and Facebook Messenger, as well as calls, for advertising targeting. Facebook needs to make it clear to users how they're using their data. And if users feel that they can have control, they're not going to delete Facebook.
Right, and, you know, with respect to the story you just mentioned about scraping call data, Facebook responded by saying, well, this is something that users opt into, but many users, as I said, still don't understand exactly what they're opting into. What do you make of the apology tour? You know, given that it's hard to believe that Facebook executives didn't understand what was happening here.
The apology tour is much more taking ads in the Wall Street Journal, the New York Times, and in the UK papers. That's more focused on advertisers. Facebook has this amazing platform. They're not running that same campaign for their own users. So what Facebook really needs to do is it needs to make it clear and provide controls so that users know and really understand how they can limit the amount of data that they give Facebook and that they give to Facebook advertisers. Today, if you're a Facebook user, it's very hard to figure out. It's very hard to figure out what you're sharing and what you're not sharing. And Facebook really needs to make that a lot easier.
What other platforms do you think could benefit from this? Will Snapchat see a bump? Will Twitter see a bump? Will Instagram, even though it's part of Facebook, many people don't understand that it is part of Facebook. Will Instagram see a bump? Well,
first of all, Instagram is having a lot of growth. So is Snap. But Facebook's real competitor in this is Google. And Google, while Google has a lot of information on people, a lot of that is not specific to individuals. And so this is a moment where Google, of course, is going to exploit their privacy, their own ability to give consumers less, to give away less of consumers' information, to be able to focus on advertisers and say to consumers they have a better proposition. Another company that's likely to benefit in the long run here is Apple. Apple has focused on privacy. They don't collect user information. And as they want to build their own advertising business, that's going to be an important proposition, not just for advertisers, but of their customers.
Indeed, they have. All right. Michael Wolff, CEO of Activate. Always great to have you here on the show, Michael. Thank you so much.
Great to be here,
for
Emily.
stopping by. Coming up, sure, the AI that powers your phone's facial recognition apps is great at making your animojis, but did you know it could be hiding an inherent bias? That is next. This is Bloomberg. You are looking at a special pizza delivery via drone brought to us by our friends at HBO for the season 5 premiere of Silicon Valley, which aired Sunday night. Be sure to tune in the next couple of weeks for a few fun surprises and perhaps a cameo or two. It just needed about 15 seconds in the microwave. All right, artificial intelligence. It is supposed to make our lives easier, from robots taking over mundane tasks to the technology that unlocks your smartphone by scanning your face. But is that technology really colorblind, really gender blind? A study by researchers at MIT shows that the gender of darker-skinned women was incorrectly identified 35% of the time. So just how do we unbias AI? We spoke with Timnit Gebru, a postdoctoral researcher at Microsoft who is studying bias in AI systems. Take a listen.
I don't know if we can unbias it completely, but we can try to mitigate the bias and we can try to mitigate the effects of the bias. So I think that the first thing we need to do, and what I'm working on right now, is give people guidelines as to how and where a particular data set can be used, a particular API can be used.
So for example, some of your most recent research along with Joy Buolamwini showed facial recognition software is far less accurate for women, and specifically women of color, than for white men. That it's essentially sexist and racist. Can you explain?
So in this work, what we did was we looked at commercial gender classification systems. So what they do is they look at a picture of a face and they tell you whether the picture in it is that of a man or a woman, male or female, binary classification. They don't handle any other types of identities. And so even in this case, when we looked at the accuracies and we break them down by the intersection of race and gender, so not just, sorry, I don't even want to say race, because race is not a very well-defined thing. So we looked at skin type. So we look at the Fitzpatrick skin tone, which is a dermatologist-approved way of looking at the skin type. So as the skin type gets darker and darker, for women, darker-skinned women, this gender classification system has worse and worse error rates, and it approaches random chance. So an answer to your earlier question, one of the ways in which we can mitigate this bias could be to try and gather more diverse training sets and also test our algorithms by different subpopulations. Instead of just having one single number that says my algorithm has a particular accuracy, it might sound nice, 90%, but then when you break it down by subpopulations, you might then see that it works much better for some populations than others.
So is this something that Apple's Face ID, for example, has a problem with?
I have not done a systematic study of Apple's Face ID, but I know that there was this highly publicized article, for example, of this Chinese woman who said that this Face ID did not work well on her, right? So I'm pretty sure this is a problem that happens across the board in most industries, across not even just face recognition, but other types of algorithms as well.
So Face ID, facial recognition, is just one example, but what are the consequences of this on the broader scale? If we don't start retraining these algorithms or rewriting these algorithms and get new data to fix it?
One thing I think that people don't understand is that AI components are being used everywhere by everyone. I mean, this is everywhere, everyone is an exaggeration, but they're being used in many different places in many high-stakes scenarios. So for example, if you look at face recognition algorithms, they're being used to identify what people think are cool, people think are criminals. They're being used for surveillance, and whether or not face recognition should be used for surveillance is one debate that people should have anyway. But even if it were to be used for surveillance, we have to make people understand that these face recognition algorithms are not accurate enough to be used for surveillance.
You say that women are at a bigger risk of losing jobs because of this. How so?
I'm not sure if women are unilaterally at a bigger risk of losing jobs because of AI. But I do think that anybody who is marginalized in this moment in our society is at a higher risk of losing jobs because of AI. And this is because many of the lower paying jobs that are more easily automatable are being done by people who are from lower income. They're being done by people who've been historically marginalized. So I think anybody who our society has marginalized is more likely to lose jobs because
How
of
much
AI.
of this would be solved by getting more women and people of color into AI and into machine learning, and how much of this we can't solve because it's already been done?
I think that a lot of issues of bias could be mitigated by not only having more people who are from historically marginalized communities in AI, but also just interacting with these people. So it's not a coincidence that the two authors of the paper that you were just describing on gender classification systems and showing how biased they are Black women, right? So if you're not interfacing with people who are negatively affected by bias in AI, you're less likely to think that this problem is a big problem.
Do you think companies like Microsoft, like Facebook, like Google are doing enough to build diverse teams and try to make sure that the bias doesn't get rewritten over and over again?
No. I don't think companies are doing enough to build diverse teams. I absolutely don't. And I would say this unilaterally across tech companies. There is a lot more talking about diversity than there is action. Sure, there is some action going on, but it's not a priority. I think that when it comes down to it, the people at the leadership positions need to make it a priority. So they need to spend as much time on trying to fix this problem as they do thinking about trying to maximize profit or something like that. And I don't think that people in leadership positions are spending enough time thinking about this.
Timnit Gebru there of Microsoft. Fascinating stuff. Coming up, stocks staged a comeback on Monday and tech led the gains. Is the pressure on the markets behind us? This is Bloomberg. Back to our top story, the U.S. bouncing back in a big way on the markets. The Dow, S&P, and NASDAQ all surging over 2% in Monday trading. This after signs emerged over the weekend that the U.S. may seek deals with China in an effort to avert a trade war. To recap the positive day on Wall Street, I want to bring back Caroline Hyde, who has more from London. So, of course, Caroline, the big question is the worst behind us? Will it last? Well, certainly, what a phenomenal pop we saw in the green in the US. And it'll be interesting to see how the futures market opens here in Europe, and indeed whether we see Asia and Europe carry on those sorts of gains, because they closed today in the red. Will they follow up where the US has been after the worst week last week in more than 2 years? We have now surged back, particularly on the S&P 500, particularly in tech. Actually, if you go into the Bloomberg and see how much tech has contributed, it's going to contribute a lot. Why? Because this lovely chart, G#BTV 516, shows you the weighting of two key sectors that did very well today, tech and financials. Financials in the yellow, as you'll see, since the financial crisis, have not been as important to the S&P 500 as tech has. Tech now makes up about 25% of the S&P 500's market value. Therefore, when you have the best day in IT stocks since August 2015, when you have $228 billion worth of market cap being added to tech, that really does help it pop. Have a little dig into the rest of the functions you can use on the Bloomberg. If you go into the S&P 500 and then type in IMAP, I-M-A-P, you get this little chart if you follow along at the moment on our Bloomberg terminal. And you'll see that in the IMAP, what do we have? 4% uptick in terms of software. You see financials up 3.2%, but then type in perhaps maybe the likes of an MMR on the IT sector. This is where we really get a breakdown of where the performance came from. Check that out. Microsoft up 7.5%. That was your biggest contributor, Emily, to the S&P 500. But Adobe, Intel, all surging up more than 6%. Note this, just 3 in the red. But Facebook, still a bit of a laggard. Look at it, up just 0.42%. Right, Facebook is going to be the one to watch, ending the day slightly up, but certainly down over the last week. Bloomberg's Caroline Hyde in London, thank you so much for that recap. And that does it for this edition of Bloomberg Technology. A reminder, we are live streaming on Twitter. Check us out at Technology, weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. That is all for now. This is Bloomberg.